How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing an overall market update, taking a look at the Dow Jones, the S&P 500, and the NASDAQ. We're also going to be doing a trading update, talking about what I personally did today in the stock market, plus a bunch of other stocks and ETFs that I'm watching and looking to trade right now amidst the most crazy volatile stock market that we've seen in recent history. And honestly, guys, I want to go over a couple thoughts that have been going through my head, kind of my mindset when it comes to trading and investing in this current environment. So I hope you guys enjoy this video. If you do, hit that like button for me. Consider subscribing to the channel if you want to see further content like this, and join our Strive Smart Discord group chat and our Strive Smart Facebook group linked down below in the description box, 100% free of charge. So let's just get right into it here, guys. The S&P 500, as of a minute and 30 seconds ago when the stock market just closed down $106, down 3.39%. And in yesterday's video, we were talking about how this market has been moving up 5% one day, down 3% the next day, up, down, up, down, up, down, and today was a lot of the same. Yesterday, we were up 4-5%. Now, today, we're down 3-4%. So, it's been a lot of the same, guys, and this volatility at this point in time, I feel like it's going to maintain in the foreseeable future, right? In the short term, I fully expect this volatility to remain. So if we're looking at the S&P here, again, down 105 points at the close, we ended up closing below a pretty critical level of resistance, in my opinion. If we take a look here on the 4-hour chart, 30-30, $3,030. This is a general area that we've been talking about as a level of resistance from a couple months ago. You guys can see back in July and back in September, this is kind of where the S&P failed 2 times. We had a double top there before roaring to those all-time highs at 3,400. And back to what I said a couple seconds ago, we closed right below that 30-30 level at 30.24 to be exact. And this is pretty bearish in my opinion. And overall, it seems like in the short term, this could be a double top on the S&P 500. So I was hoping on a bullish perspective here, from a bullish perspective, that we were going to upswing heading into the close and close maybe at 30.40, 30.50, 30.60 even, right? And that would have been bullish in my opinion, but the fact that we didn't break out of moving averages, we didn't close above 30.30, the bears are still in charge. And honestly, yesterday, the bulls were in charge because of how aggressively we closed the day. So it's quite interesting, the turn of events here that we're seeing from a technical perspective. And honestly, I could see further red, especially heading into tomorrow, it being Friday. I could definitely see another dump down in SPX, maybe down to, let's say, 29.80. That would be a modest drop, honestly, considering these massive drops we've been seeing. That would only be 40 points below from where we are now. I wouldn't be surprised if we did fill that gap down, right? And going over here to the SPY, which a lot of people use to analyze the markets, it's simply an ETF that tracks the S&P 500. We got rejected hardcore at $307 today and at $309 today, which both are very strong resistances on SPY, right? SPY. And on the 4-hour chart, actually, no, let's go over here to the 20-day chart. You guys can see 309 was extremely important on SPY. If we were to break out and do something like this, as illustrated by these trend lines here, that would have been extraordinarily good for the bulls because A, we're breaking above 309, B, we're breaking above moving averages, C, we're continuing the uptrend, the little rebound that we've been seeing over the past couple of days would be intact, right? We would have hit a higher high, and obviously none of those things happened. But one positive thing I guess you can say about SPY is we held 301, 302 as a support heading into the close today, which we actually held 2 days ago back on, what was this, Tuesday, heading into the close. So for me to see a further sell-off in the S&P, in SPY in particular, 302 needs to be broken. It needs to break below this, and of course, I'm keeping an eye on the futures heading into tomorrow overnight, and of course, what the large caps are doing in tomorrow's session in the morning, of course, to see where we could end up going in terms of the overall markets. And again, if we break 301, like I said on the S&P, we may gap down to, let's say, 2980, 2970. On SPY, going back to SPY, we may gap down to, let's say, maybe not 292, but if we break 302, I could for sure see it going down to 299, 298. And then from there, maybe down to, let's say, 294. And another major support coming up is 290 to maybe 292. So if we see some sort of sell-off tomorrow like we saw today, the SPY will for sure get to those levels, maybe even tomorrow, which I know is crazy, but in the volatile market we've been in, I honestly wouldn't be surprised if that did end up happening. So taking a look at the NDX here, the NASDAQ 100 index, very similar to the S&P. We're seeing a bit of a bearish pattern here, 5-day, 5-minute double top. We broke the overall uptrend this morning at around 10:50, about 11 a.m. when we did see that massive dump off. So in the meantime, taking a look at what the technicals are looking like right now, NDX is bearish. It's turning bearish at least, right? And going back to that hourly chart, a level that I'm watching on the NDX here on the NASDAQ is going to be, let's say, $8,600 flat. $8,600 flat is where we ended up holding at Tuesday's close. Right here, you guys can see it. And, if we break that to the downside, we're breaking the 50 SMA support here, and again, 8,600, and that could lead to a lot of further selling, in my opinion, and that would be a perfect opportunity to, let's say, trade SQQQ, which is an ETF that goes up whenever the NASDAQ is going down at a 3x rate. And this could be setting up for a fantastic play tomorrow. Absolute fantastic play if the markets end up dumping. And SQQQ, TVIX, SPXS, these are all at the top of my watch list heading into tomorrow. So going over the Dow Jones down almost yet again 1,000 points on the day. Down 969 points to be exact, 3.58%. in the red here for the Dow Jones. And just like the S&P, just like the NDX, we're seeing a double top here. We're seeing a resistance at around 26.7, like I talked about in yesterday's video and in some videos in the past, right? 26.7 is very strong. And in my opinion here, the Dow Jones obviously selling off aggressively today. If we break 2,500, or rather 25,800, we may fill the gap down to, let's say, 25,300. And of course, if we break that support, we may be testing the lower low here at 24,600, which, if the markets get that low again, guys, it's going to be an absolute bloodbath. Let's be honest. We're going to be pushing 15, 20% in the red in the major markets at that point. And if you guys don't know, anything past 20% in the red, that's what constitutes a bear market. So back in 2018, very quickly, for those of you guys that don't know, remember, we get new viewers every day on this channel. Back in 2018, the S&P fell about 20%. It was in a bear market for a very small amount of time. Maybe not the S&P, actually. The NASDAQ might have been in a bear market for a little bit. It was. You can see a 22% drop from that peak back in, what was this? The beginning of October over to the end of December. That was a 22% drop. So overall, guys, at this point, again, this market, it's one of the most volatile markets, if not the most volatile market that I have seen with my two eyes in my life. I don't know if that's the case for you. I'm sure you've seen more volatile markets, especially if you're a lot older than me. It makes sense, right? Because you've seen many recessions in your time, right? But for me, I haven't seen the market swing up 5%, down 4%, up 3%, down 5%. Literally day after day. I personally just have never seen that. And I'd love to know, what do you guys have to think about that down below in the comment section. So that's kind of what happened today in this market. And again, I foresee this to continue at least in the short term. And since tomorrow is Friday, it could very well be another bloodbath in the stock market, which I'm being very cautious about with having a lot of cash on the sidelines and really by not buying many equities. I haven't been buying many equities just to be safer in this current environment that we are in. So let's talk about what I personally did today in the stock market. And the truth is, I did not buy any stocks. Yesterday, I bought a little bit of MasterCard, ticker symbol MA. I bought a little bit at $293. Did I cut my losses on those since the price of the stock is below where I bought? No, I did not cut my losses on MasterCard. And the truth is because it's not a big position whatsoever. I scale into my swing trades, and I know many of you guys do that too, and this is one that I'm comfortable holding for a couple weeks, couple months. We'll see, maybe not a couple months, but I feel comfortable holding it for the time being with the very small amount that I've put in here at $293. And let's say it drops 20 points tomorrow. I'll readjust the situation, and of course, I'll let you guys know in tomorrow's video, but most likely, I would just cut my losses, get out of it, let's say, if it were to see a big dump off tomorrow, but again, I'll let you guys know what I end up doing. And for Microsoft, I'm simply still holding onto my Microsoft position right now, a little bit below break even, so I'm a little bit red right now holding those Microsoft shares, which I'm totally cool with. And I traded today TVIX, and let me tell you guys, this was one of the craziest days in recent history that I've seen for TVIX. This thing moved from $120 up to about $148 today from bottom to top. And that's actually not where it moved. Or rather, it moved even more than that. It actually closed yesterday at $107. So the price of this ETN went up $41 in the span of, or actually no, $31 in the span of 24 hours. And that was a move of, I think, 40%. Let me double check that for you guys. Yes, it was up 40% at one point, which again is one of the biggest moves in recent history. If you guys have been watching my channel for a couple months now, you know that we saw a day a couple months ago that TVIX went up like 60% or something, 50%. And it was either this day here or this, or not day, rather, the time period here or this time period here. Actually, no, it was one day where it went up 50, 60%. And comment down below if you guys remember that. I know at least one person remembers what I'm talking about. So for me, I traded TVIX today, and to be completely honest, I held through a little bit of pain. I personally got in at around $126 with a smaller position size. You guys know, especially if you've been watching these videos, I'm not going in too heavy on these leveraged ETNs because they're quite volatile. They're quite risky, believe it or not, which you guys obviously know. And the truth is, if you time it wrong, you can lose a lot of money. So for me, I'm comfortable with day trading a couple $1,000 with TVIX. I'm not day trading 10, 20, 30K. If I was, I'd be, and I hit the trade right. And anybody that trades with that amount of money for TVIX, you can make a boatload of money in one day. But the truth is, I'm only trading with a couple $1,000 when it comes to TVIX. And I got in $126. I actually held through a little bit of pain. This is when the S&P was seeing its rally this morning. You guys can see it here. We rallied a bit, got rejected by this 180 SMA, and ultimately this is why I was holding on to my TVIX. If we were to break this level on the S&P, I would have cut losses. But the fact that SPX got hit quite aggressively and it dropped quite aggressively after that rejection there, that led me to hold on to my TVX, and I held on to it a bit longer than I wanted to, but overall, I ended up coming out on top. So 126, I got in again, and I ended up selling out. I think it was at around $133 per share. And obviously, hindsight, looking back on it, I left a lot of money on the table, but it's okay, guys. The truth is you cannot grab every percentage of profit, every dollar, and if you get too greedy, it's going to come back and bite you. So for me, I was up a nice chunk. I already held through some pain, so I wanted to just lock in those profits right there. So from 126 roughly up to about $133 there, that was a nice move of around 5 to about 5.5%. And honestly, guys, with this volatility, TVIX is what I've been focusing on the most. Not buying individual stocks for swing trading, at least for me. Sure, you can day trade some of these individual stocks, but I've been focusing heavily on TVIX and the ones I mentioned earlier, SQQQ, SPXS, which goes up whenever the S&P is going down, and just all of these in general. They're all just awesome to keep an eye on when the markets are crazy. So let me know down below in the comments, what are your thoughts on these trades, the markets in general, and any trades that you made in this crazy volatile stock market that we've been experiencing. So let's talk about some stocks here. Let's go over some of my watch lists, and I want to share with you guys some thoughts here when it comes to some of these cyclical companies that a bunch of people have been buying into that I really don't like. I don't like these stocks, and again, I'm not trying to offend you if you own these stocks. This is just simply my opinion, right? It's my channel. You guys obviously follow it. You guys obviously support me, so I want to share with you guys my opinion when it comes to this stock and these airline stocks in general. So first, let's start off with CCL. This is one that it's been the talk of the town here on YouTube, and I've said literally when the stock was $40 per share like a month ago, 2-3 weeks ago, whenever, I said that I don't like the stock. I'm not interested in trading, or not even trading, investing in a stock like CCL due to it being a cyclical stock, due to it being under a lot of pressure due to the CV outbreak, and honestly, due to it having an earnings slowdown at this point. And if you guys know anything about cyclical stocks, you know that to make money, you have to sort of, I know timing the market, it's near impossible. It's very difficult to do. But with these cyclical stocks, timing, believe it or not, is pretty important when it comes down to making some money in your investment. Just take a look at CCL here over the past 20 years. This is a great time frame to give you some insight on what happened in previous recessions. What happened back in the Great Recession leading up to it? CCL went from $50 per share down to $14 per share. It rallied a little bit up to 2010, but then ultimately it tanked aggressively heading into 2012. And take a look at this, guys. QuickFS.net. This is a financial statement, a website that shows income statement, balance sheet, all that good stuff for different companies so you can see different metrics, right? Take a look at CCL's earnings. And the goal with these cyclical companies is to buy them cheap. Buy them when their earnings have been crushed and when their earnings are slowly starting to rip back up, right? To gain, right? And you can see here clearly earnings per share share in 2010, 247, 2011, 242, 2012, 167, 2013, 136. This is where their earnings bottomed out. After the Great Recession, after the economy started to spur back up here in 2012, 2013, 2011, this is kind of where their earnings were bottoming out and slowly churning up heading into 2014. And take a look at their stock price during this time. 2012, we got bottomed out, and as the earnings were upticking, that is when the stock went on a ridiculous rally from $32 up to $72 from about 2012 up to around 2018. And notice how their earnings from 2017 to 2018, this could very well be the peak of this earnings season. Or this earnings cycle for CCL, for Carnival Cruise Corporation. So what am I trying to say here, guys? What I'm trying to say is this CV outbreak that we're experiencing right now, it's going to hurt Carnival's profits, their earnings even further, to the point where we may see, like we saw back in 2010, 11, 12, 13, we may see a decline in their earnings aggressively, which could in turn tank the stock price even more. And we've already heard that the CV outbreak is going to hurt their earnings. So I think at this point, buying CCL, not really any cyclical company, but CCL in particular, I think, sure, it offers some value, but honestly, I don't think the bleeding is over yet. I could see this stock go down to, let's say, $20 at its lowest, maybe 22, maybe 25, who knows? But I could see it going down even further, especially as these earnings continue to drop. And God forbid we get into a recession, this is going to get pummeled. So I think, to buy CCL, we need to see an economic turn down, which, who knows, we very well could be in a recession right now. We need to see some sort of drop in their earnings and then a slow recovery in their earnings. And that's the risk when it comes to CCL. If you buy the stock right now and their earnings drop for the next 2 to 3 years, you may not turn a profit for another 3 years from now, maybe 2 years from now. So for me, this is extremely, extremely risky of a stock to get into, just due to the cyclicality of it. And is that even a word? I think it is a word. Anyway, let me know, what do you guys think about that down below? The truth is, I'm just not looking to buy it unless we see some sort of bottoming out in their earnings. And at this point, their earnings are at a peak, guys. $4 per share EPS. Once that gets down to maybe $2, maybe $2.50, whatever, we bottom out and pop from there. That could be a time to buy into it, but that's kind of just a little lesson on cyclical stocks. They grow as the economy is doing well, people are spending, and then as the recession comes around, as the economy slowed down, people aren't going on cruises, they're not spending, their earnings go down. It's like a hill, it's like a wave. You want to buy towards the bottom of the hill on the way back up, but again, it's hard to time it, but you have to do your best to try and time it. And at this point, again, maybe $20 could be the bottom, 22, 25, and I will for sure be watching it. But those are just some 2 cents around CCL, which it's just been getting crushed, guys. Take a look, 14% in one day. And another thing, or another industry where this cyclicality applies to, is the airline industry, right? We got DAL, Delta's down another 7% today. AAL, American Airlines, down 13%. Oh my goodness, I haven't seen this till right now. Love, Southwest, down, 4% on the day. And it's the same thing, right? When the economy's booming, people are flying, people are traveling, their prices are going up. Just take a look at Southwest. Back when the economy recovered from the Great Recession, this thing went from $9 up to $67. That's the time to buy a cyclical stock after the economy's recovering and when we're going into the boom phase. So for me at this point, I'm not touching airline stocks, and I'm not touching cruise stocks and anything that has to deal with that kind of business model at the end of the day that heavily relies on supply and demand and Although every business relies on supply and demand, but you guys know what I mean. The supply and demand of of discretionary income. These businesses, they do have a lot of more downside. There's a lot of more potential downside. So for me, there's just a lot of risk in these types of businesses. And if we're taking a look at some other stocks here, Facebook, this is getting down to a decent value, $185 today, down $7 on the day, down 3.44%. CGC, MJ Company here, down 5% today, down 95 cents. AMD is down 4% today, down $48 on the day. We have Nvidia down 4%, down $11 on the day. And believe it or not, Space, SPCE, Virgin Galactic, this is one of the only companies on my watch list today, the only stocks that's actually green. Virgin Galactic up 33 cents right now, up 1.39%. We have Google down $67, down 4.87%. Amazon down $51 today, down 2.6%. We have Apple down $10, down 3.24% today. Netflix was holding up pretty decently, but still down $11, down 2.87%. So my mindset right now, when it comes to trading in the stock market, I'm focusing on quick in and out plays, kind of like TVIX today, although it wasn't as quick as I wanted it to be. You guys get the point, right? Quick in and out day trades. And let's say the markets miraculously bounce back tomorrow, because again, anything could happen in this volatility. We may get a bunch of day trade opportunities in some of these stocks. We've seen it before. 2 days ago when the markets ran up 5%, we got extreme opportunities in, let's say, the large caps, the Apples of the world, Googles of the world, right? Pretty much every stock did well in yesterday's session. Right, we can see Apple went up to about $304. That could have been a day trade. AMD was up to about $50 in yesterday's session. That could have been a day trade. So for me, that's kind of what I'm focusing on now. I'm already in a pretty heavy swing with Microsoft, have a little bit of MA in my swing portfolio as well. And when it comes to investing, kind of like what I said earlier with CCL, I'm avoiding those stocks, those types of stocks. I'm investing in blue chip companies like Johnson & Johnson. What companies have I been buying? Disney, some regulated utilities, very safe, like Duke, DUK. Haven't bought recently, but these are the long-term investments that I'm focusing on. I'm focusing on cash flow. I'm focusing on stability. I'm not looking to take any massive risks in unprofitable companies or cyclical companies like, let's say, CCL, even Uber, maybe, even Beyond Meat. Like, these stocks, they're great, they're fun to trade, but for long-term investments in this economic environment, I think it's better to just focus on the blue chips, like the J&Js, the PGs of the world, Clorox. Just, they're not as sexy, they're not as fun, but they are dividend payers. They are stable. They've been through recessions in the past, and that's kind of where I think the recession, I don't know when it's going to happen, but it's all I can say. It's closer than it was 5 years ago, right? So we have to prepare. And for me, that's kind of what I'm doing in general right now. And back to these market ETFs, I'm focusing on these heavily for the in and out day trades. So that's kind of it for today's video, guys. Didn't go too deep into any individual stocks, but it's just, those are just some thoughts going through my head. Don't panic. Don't panic in these environments. Try to use other people's fear to profit on it. Try and profit on the fear that we're experiencing here. A lot of people are freaking out. Markets are going up and down, but the truth is, this is the best time to make money. Maybe not if you're a swing trader, but if you're an in-and-out day trader, these volatile times provide a lot of opportunity, and they allow you to monetize the overall fear that the media is pushing into the public and into the masses. So that's it for today's video. I'm going to end it off here. If you guys did enjoy it, go down below for me, hit that like button, and also consider subscribing to the channel if you want to see further content like this. And if you guys want 2 free stocks from Webull valued up to $1,400, I have an affiliate link down below in the description box. All you have to do is deposit $100 and you get those 2 free stocks, one valued up to $1,400, and that supports the channel, as everything I do here on the channel is 100% free of charge. So thank you guys for watching. I appreciate all of your support. Let me know in the comments, by the way, what are your thoughts on CCL, airline stocks, cyclical stocks? Is now the time to buy, or is there more pain for them in the future? I'd love to know what you guys have to think. I'll catch you all in the next video. Peace out.